Welcome back to Growing Your Savings Using Blue Chip Stocks. Prices were updated on Friday. The economy is struggling, and more interest rate increases have had a big effect this week. The markets were well up at the start of the week, but investors did some selling off at the end of the week, which pulled the overall markets down. We're going to check in with the stocks we are watching on the TSE, as well as our U.S. stocks on the New York Stock Exchange and the NASDAQ. We're also going to check our 4 fantasy portfolios on the Canadian market. Our $5,000 portfolio is down 1% on the year, which is down from a 9% increase 2 weeks ago. Our $10,000 portfolio is down 2% on the year, which is a drop from a 6% increase 2 weeks ago. Our $25,000 portfolio is down 4% on the year, which is down from a 6% gain 2 weeks ago. And our $100,000 portfolio has taken the hardest hit, down 9% on the year. This is a drop from the break-even point 2 weeks ago. These are tough times for sure. Not what I expected to see when I started this channel at the beginning of the year. However, this is unprecedented, and we have not seen the market perform like this since 2008. If you have already invested, hang in there as it will get better. If you have not yet invested, this is the time. The prices are low, and you stand to make great gains when the markets rebound. Things to remember, as always, the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can be used to buy more stock. Dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, others tend to go up. And when the market takes a tumble, like the tumble it's been taking all this year, this is the time to buy. If you have not yet invested, get your money in there and buy. The prices are low. Either add cash or reinvest your dividends. And just a reminder, this is for information purposes only, and I take no responsibility for any gains or losses you experience in the market. So let's take a look at the stocks that we're following on the Canadian market. Manufacturing and industry, we are down 16% overall. Everything is in the red in manufacturing and industry. Consumer goods and services, we actually have 3 that are in the green. Loblaw is showing a 14% gain, and Metro and Molson Coors showing slight gains. However, average, we're down 11% on the year. In finance is one of the hardest hit sectors at the moment. We are down 20% overall. Resources and commodities still showing strong green gains with an overall average of 22% gains on the year. Utilities, we have we are down 1% overall. We've got Canadian Utilities and TC Energy showing gains, and the other utilities are just showing small losses. So the Canadian market overall down 9%. The US market, manufacturing and industry, we have some green spots, Archer Daniels Midland and IBM. Otherwise, it's down an average of 20% on the year. Consumer goods and services, a couple of bright spots. McKesson is up 19% and Nordstrom 11%, but consumer goods and services average a loss of 11%. Finance in the US is just like it is in Canada, solidly in the red, and it's negative 29% this year. Resources and commodities, Alcoa is down. However, Newmont and Chevron offset the losses in Alcoa, and we average a break-even point in resources and commodities in the US. For utilities, we are completely in the red for utilities, and we are down 13% in utilities. So the overall US market is down 17%. Taking a look at our $5,000 portfolio, we are down 1% on the year, not too bad. We are showing a value of $5,023. That is a loss of $517 from 2 weeks ago and an overall loss of $60 on the year. Dividend income has not changed, so $187.44 annually is paid out for this $5,000 portfolio. Our $10,000 portfolio, we're down 2%. Our total is 9,832. We are down 794 from 2 weeks ago, and we are down 4% overall since the beginning of the year, or $4, I should say, $4 since the beginning of the year. Dividend income has not changed for the $10,000 portfolio. It pays out $357.66 per year. Our $25,000 portfolio, we are sitting at -4% overall. Our value is $24,014. It's down 2,422 from 2 weeks ago, and it's down 846 overall since the beginning of the year. Dividend income for the $25,000 portfolio is still $718.52 a year. Our $100,000 portfolio, which is the hardest hit, we're going to take a look at Bombardier. So Bombardier, in the past week, they did a 25-for-1 stock split. So where we did have 100 shares, we now have 4 shares. And where our price last week was $1.45 per share, it's now $29.26 per share. So they did that to boost the value of their stock. So if you had Bombardier shares, you now have you have 25 for every 25 shares you have one. So our $100,000 portfolio is down 9% on the year. We're sitting at 88,908. It's a loss of $7,500 from 2 weeks ago, and it's a loss of $9,600 since the beginning of the year. Dividend income for the $100,000 portfolio is still sitting at $2,462.57 per year. So looking at the markets, looking at the Monday markets, and the Monday markets have started off strong. Let's cross our fingers and see if we can take that strong rally all the way to the end of the week, and we can post some better figures next week. Look forward to talking to you then.